Back with Bobby and JJ Radio, and we're talking everything investment properties today. Had a great interview with Greg Drew. If you missed any of it, you do not have to cry. You go to bobbyandjjradio.com, be a fan of our show. You go to Facebook, Instagram, Twitter. You can also find us on there, and you can get some updates on our show. It'll be on SoundCloud on Monday, and then his good-looking face will be on YouTube here pretty soon. We have our next guest, which is Louis Kowalski. Louis is a fellow Laredoan, like my man Bobby over there.
I'm from Laredo.
Yeah, he's from Laredo. He's saying it out loud now. He started his career with New York Life, one of the biggest insurance companies here in the United States. But he's been on his own since 1976, and he really targets the 45 to 70-year-old community. And he's a no-joke life insurance specialist. And I want to say thank you, Louis, for joining us.
Thank you, Bobby.
And giving some of your time. So life insurance models, just to kind of dive into it, it's said that 95% of all policies are never claimed.
That's correct.
So tell us about that.
I was more shocked than anybody else to find that out.
It's like, are we not dying, or what's going on?
Life insurance companies are some of the strongest companies in the world.
Sure.
They have a lot of money, and they are very quietly some of the biggest companies in the world. And the reason is when they sell a life insurance policy, they know that 95% of them will never result in a claim.
Sure.
So my job is to make sure that those percentages are reversed.
Why is that the case?
People forget they've got it.
You lose the paperwork. Mom didn't tell you.
They can't find it, or not only that, you get old, you forget you've got the policies.
Right.
Any number of term insurance lapses, whole life or universal life will lapse because of non-payment. Things like that. It's kind of, I call it life taking a bite out of you.
Sure.
So what happens if it's a single person, no relatives, no kids? What happens to the life insurance?
A couple of things. The life insurance.
I'll take
it. Yeah. When that single person dies, then his estate will gather the proceeds, and then it's up to the estate to divest of the proceeds.
Sure. And so what are short pay policies?
Basically, it's a policy where you load the premium and you pay for it within 7 years, 10 years, 20 years to 65. Whatever.
Okay. So
the premium will reflect that. But I like that because at the end of the premium paying period, 10, 15 years, you've got life insurance.
You have to worry about it.
You don't have to worry.
You don't worry about being lapsed
Yeah,
or forgetting
exactly.
about it or anything like that.
You won't join that 95%.
I got
And
you.
what is a high cash value policy?
High cash value policies today are being designed with high cash value for a couple of reasons. Number one, to help with that short pay. Number two, in larger life insurance transactions, and I'm talking about $5 million up, you can find a bank that will lend you money on those premiums.
Sure.
And
That's collateral.
As collateral, and you'll use the cash value as collateral, and you need that high cash value to offset.
So your thing is, if you're paying into something, at least have something that's an asset that you can borrow.
Can anyone get a high cash value policy?
Sure.
Well, not you, Bobby, because your credit's terrible.
Yeah.
I'm just
Is
kidding.
800 terrible?
Don't try that. Cool.
But no, that can work.
All right. And so what's the difference between term and whole life? Because I know that those
term
those
and life
terms-
insurance is for a certain period of time, say for 10 years, 20 years, 30 years.
Okay.
At the end of that time, the insurance expires.
Okay.
It's also the cheapest life insurance you can buy.
Yeah, just in case during that time.
Yeah, so most people will buy life insurance, term life insurance, for a specific purpose and for a certain period of time.
So we have key man policies on each other.
Exactly.
Yeah.
Term life.
Term
Right.
life. Sure. Okay.
Whole life, I like indexed universal life, is permanent life insurance, and if it's done right, should last you. I like to design my policies to where they last you. You're 121 years old.
Can the term life like that anyone has, can you convert it into a whole?
Yes, you can. Most companies now have shortened their conversion period to 5 years. You have to convert within 5 years, which for a lot of people is somewhat unrealistic.
Right.
What I like to do is make sure that people review their term policies and switch out to another term policy within 3 to 5 years, which then lengthens that period and also lengthens the term period. So, yeah.
So what happens when life insurance it gets too expensive? Is there any options?
There's a couple of options. I'll give you an example. I had a client who had $750,000 of life insurance on himself. His wife had $750,000. She died. All right. He didn't need the life insurance anymore.
Because it was for her.
It's for her. Well, not only that, his premium was roughly $20,000 a year.
Wow.
Right? So it was too expensive.
Yeah.
So we have a facility that will buy life insurance policy. So we were able to facilitate that sale for him. So he sold the policy and made about $30,000 and went down the road.
So at $20,000 a year, what does that pay when he dies?
is going to pay $750,000.
Nice.
On that one, yeah.
Nice.
So who's life insurance for? Because Bobby doesn't think he needs it. He thinks he's a
Life insurance is for a
vampire.
couple things. Life insurance is a love purchase. You buy life insurance because you love somebody.
Uh-oh, Bobby doesn't need it then.
I'm good.
Yeah, you're good, Robert. And not only that, life insurance, the question you need to ask yourself is, if you die, who will be affected by your death?
Right.
Will it be your business partner? Will it be your family? Will it be somebody else? That's the question to ask.
Bobby might as well kill himself if I die, 'cause he's gonna be homeless in about 6 months after that.
I'd do a year.
But we do have key man policies on each other for that exact reasons. But what's the difference in the value of the dollar? How is that affecting these insurance?
When you're
plans?
buying life insurance, you're paying pennies on the dollar for that dollar bill.
Right.
The dollar bill that you make when you're working every day, that's 100 cents on the dollar. When you buy that life insurance policy, you may pay out for the rest of your life 5 cents on that $1 bill.
Right.
It's the best value for your money.
If you look at it, yeah, absolutely. Look in that term. And a real quick takeaway. So when should someone get life insurance, and what are the qualifications?
You basically have to qualify medically. Everybody has to take an exam. And there are some companies that will allow you not to take an exam, but most time it's medical qualification and income qualification.
And when should I do it, or when should it?
Immediately.
Younger the better.
Would
younger the better.
it hurt Jage's chances to get insurance if he's a mariachi?
They have rough lives. We have rough lives.
It all depends on.
We don't go to bed
Laredo.
early. We stay up late. It's crazy.
It's a heavy instrument.
If you're from
It's a
Laredo,
heavy instrument.
It's part of the deal.
You got back problems?
Yeah, it's the guitar, everything like that. Yeah. So if anyone wants more information about all these different types of insurances, or to really talk to a true professional, you can contact Louis Kowalski at 210-829-7577. Again, that's 829-7577, or email him at louis, Louis, at bene-comp.com.